because he wants to wait to take Social Security until age 67. You just saw a blue jay right behind the camera here. So if you don't need a ton of income, you can do that so you can leverage yourself a higher Social Security payout. Hey there, I am John Stevenson, the Guaranteed Retirement Guy. Welcome back. Today we're going to be talking about MYGA contracts and bridging income gaps. I'm right behind Genoa Falls, right up here in Genoa, Nevada, and freezing my feet off, like literally. See them right down there? They are in some cold water. This is all snow runoff. So it's great for inflammation. So if you are hiking around and you're thinking, man, my feet hurt, well, go find a cold pool somewhere and it'll take it way down. In fact, when I go out hiking with my kids, like our long hikes, I'm going to take them out on a hike here in the next couple of months. It's going to be 42 miles, and I'm taking 4 of my kids. And they got tons of pools all along the way. They're nice and cold, and they just take the inflammation out and they make you last. So anyways, there's a little bit of advice on top of annuity talk. The guy that I'm talking about, he's 60 years old. He's going to buy a MYGA, a multi-year guaranteed annuity. These are fixed annuity contracts. They pay fixed rates, and I think he's getting 5.65, if I remember right. And he's going to take that out and strip off the interest until 67, because he wants to wait to take Social Security until age 67. He's trying to maximize that, which is a good idea. So he's doing that, and then of course, at the end of the 7-year MYGA period, that income will stop and he'll start taking Social Security. So it's a nice way to bridge an income gap. If you don't need a ton of income, MYGAs can be the way to go. I mean, they're definitely not going to pay you as much income as an income rider will. An income rider will pay you a whole lot more, and it's designed to. It's designed for highest lifetime income, whether it be joint or single. So I always recommend those if you're looking for highest joint income. You just saw a blue jay right behind the camera here. So it's pretty cool being out here, and we're literally at the tail end of the spring, and summer just started like this week. So it's been nice because we've had some cold fronts and we're kind of ready for it to be warmer. Anyways, think about that when you're looking to bridge income gaps. You don't only have to use a MYGA. A MYGA is a very good idea just because rates are so high. And if you're thinking you'd like to preserve the principal in that account, maybe roll it over to something else afterwards, it's a great strategy for doing that. It's definitely not the best strategy for highest income, but maybe you don't need the most. I mean, maybe you're working part-time. Maybe at age 60, you decide to work for 7 years just part-time, and you stick some money into a MYGA contract and make money off of that to cover the rest of the bills. And then you can do that so you can leverage yourself a higher Social Security payout at age 67 or later, depending on what you want to do. And some people will do this with SPIA contracts, like certain period, like you could do this with a certain period 7 and get more income for sure. Absolutely more income. But then the money's gone. So, which is fine. Some people are okay with that and it serves its purpose. But that is another option if you're thinking about like bridging an income gap. You can do it with a SPIA, like a period certain, however long the period is. I think the minimum is 5 years, but anything above 5 years, you can customize it to however many years you want them to pay out, and they'll show you the highest payout. So anyways, I'm happy to do that for you. If you're looking for annuities and you want your questions answered and you're thinking about retiring here in the near future and you just want someone to give you some solid advice, some transparent and honest advice, regardless of what his commissions are, then I would invite you to go to my website, johnstevenson.com, and check out the annuity calculators yourself. Okay, you can check those out before talking to me. You can book a call right there if you want, or there is a link below this video, and you can book a call with me there. So if you are looking for annuities, I'd love to help. So I'm not going to try to push you or coerce you to buy something, but I will show you everything that's available, and then it's your call at that point. So anyways, hope you enjoy the surroundings. It's beautiful. There's another look at the falls. There's the trail I came up. The trail goes that way. Another 5.5 miles if I want to go down, or into infinity if I want to go up to the Tahoe Rim Trail, and that just goes around for 168 miles. So I've gone up there. I've done some of that, but I have not done 168 miles yet because that is a long loop. You gotta have a lot of time to do that. So I appreciate you watching. I hope you liked the video. If you do, like, subscribe, share, comment below, and let me know if you need anything, okay? Thanks a lot. We'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.